So let's start by looking at industry growth. Q1 growth for video streaming continued to slow. We were about 1.5% over last quarter. That's about 10% year over year. And it's an incremental 26 million subscribers that Antenna measures for the subscription video category. You know, as always, we would caveat this, that this is actually, while the growth is slowing, this is actually solid compared to many other digital categories, which have declined from their COVID peaks. So video also had a COVID boom. The growth has slowed, but unlike these other categories, video is still growing at strong double digits. Netflix was actually the big growth story over the past year, which is a new thing. Netflix, at least in the US market, subscription growth had grown before that. But Netflix for the past year is about 7 million net adds in Antenna's measurement. And that's really due to their password sharing crackdown and also to the much stronger uptake of the ad plan amongst its new subscribers. Peacock was actually our biggest grower from a percentage standpoint in the past year. Antenna has Peacock growing at about 31% year over year. The real story of what's going on in the subscription video category is captured in this chart. We call this our volatility chart. And the way to read this is that the green bars on the top are the gross ads for the video category for the quarter. The red bars on the bottom are the total cancellations for video services for the quarter. And the dark shaded portion in the middle, that's the net. That's the net ads, or could be net declines, has been all net ads. And what do we see? We see the green bar is getting bigger, the red bar is getting bigger, and that dark shaded portion in the middle is getting squeezed. The issue for the industry is that that green bar has cost. That's the cost of acquisition. The red bar also has cost. That's the cost of retention. Those cancellations actually cost money for these services. And the shaded portion in the middle, that's their revenue growth. And so if we have higher costs on the top and higher costs on the bottom and a decrease in the revenue growth in the middle, that is going to drive this discussion that we have in the industry right now around an optimization to more profitable growth.